Thank you for joining us at XM.com. In this market preview video, we'll be looking at the Bank of England policy meeting coming up on Thursday and the outlook for sterling. I'm Cristina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, with economic data coming in mixed lately, the Bank of England must strike a very delicate balance in order to reduce inflation without choking off growth. Therefore, do you think we're headed for another rate hike this week?
Hello, Christina. I think we are headed for another rate hike. I just don't know if that's going to be good news for the pound. So let's unpack it. The UK economy looks to be losing steam. We've had a lot of data releases lately showcasing a very sharp slowdown in economic growth. Economic growth was stagnant in July from a year earlier. And if you look at business surveys, they suggest the situation is likely to get worse. Business surveys warn that a minor recession might be on the horizon. And employment data have already started to reflect this weakness. The labor market, the UK labor market, lost jobs in July. The unemployment rate went up. Open job vacancies declined, which is a sign that labor demand is softening. So employment trends are moving in the wrong direction, and that's likely to persist according to business surveys. Now, the problem for the Bank of England, and the reason they are likely to raise interest rates, is that wage growth is very hot. Wage growth was running at 8.5% in July. So that suggests that inflation is not going to cool anytime soon. And the latest rally in oil prices reinforces this notion that inflation is likely to be persistent. So it's a difficult choice for the Bank of England. On the one hand, you have the economy slowing down and the risk of a recession. And on the other hand, you have inflation looking like it's going to be stickier, more persistent. Now, what's the Bank of England more likely to do? Well, the markets are pricing in an 80% probability of a rate increase, it's justified considering that most Bank of England officials that spoke lately prefer to tighten a little bit further. However, Christina, I think it's going to be a closer call than the markets think. I think the vote count is likely to be split. Some policymakers are likely to vote in favor of no action because of how concerning the data has been. And most importantly, I think the forward guidance is not going to include a commitment to any further action. I think the Bank of England is going to do what the European Central Bank did last week, and they're going to signal that this might have been the final rate increase, and we could keep interest rates at current levels for a longer period of time, but raising them even further is going to be relatively difficult. It would require very strong economic data moving forward, which is unlikely to be the case. So, long story short, I think the Bank of England is going to strike a cautious tone at this meeting, and they are not going to commit to any further rate increases.
And taking that into account, Marios, let's look at sterling. The pound has been the star currency of 2023 so far, but lately it is facing several headwinds. How can we see it move on the Bank of England policy meeting on Thursday?
Yeah, so I think that for the pound, it's a lose-lose situation. This Bank of England meeting is almost a lose-lose scenario for the following reason. Either the Bank of England does not raise interest rates. That would be a total shock for the markets, considering the market pricing, and that could see the pound decline. Now, in the scenario that they raise interest rates, first of all, the pound could spike higher, but I think that the upside reaction is likely to be minor because that's what the markets expect already, a rate increase with an 80% probability priced in. And secondly, I think that the upside reaction could reverse, could unwind, and we could see the pound trading lower if the vote is split and there's no clear commitment to any further rate hikes. Very similar to what happened to the euro after last week's ECB meeting. So either the Bank of England does not raise interest rates, or they raise, but the upside reaction in sterling might be minor and short-lived because the market might start to focus on the prospect of, on the fact that the tightening cycle has already ended. And usually when that happens, we see a sell the fact reaction in a currency. I think that's likely to be the case for the pound this week.
I see. Marius, thanks so much. The Bank of England meets on Thursday. This was a market preview. Thanks for watching at xm.com.